Thank you. To answer your question directly, I would say on many aspects, stronger than ever. And this is fully manifested by the numbers. It's fully manifested by a fiscal success. The primary budget surplus of Greece is 4.8% of GDP. The headline surplus is 1.3%. We're one amongst the 6 countries of the EU that actually have fiscal surpluses. We're growing by 2.3% right now, much higher than the EU average. Our unemployment numbers are shrinking every month, and certainly on a year-to-year basis. So I would say that overall, we have a fiscal stabilization story. We also have a digital success story to match this. And if you see how those two successes manifested themselves simultaneously, tax evasion would be the story there, how we managed to capture most of the VAT gap. And the headline story of the last, of 10 years ago, which was tax evasion and Greece's fiscal failures, are now effectively a fiscal success. And I think it's quite interesting to make this observation. It's quite pertinent to make this observation exactly 10 years to the day that we had capital controls and the failed referendum of 2015. How we managed to have all of those successes within 10 years. And now, with, of course, the negative headwinds of the international economy, which your question implies, Greece has the capacity to create the positive tailwinds to counter them. And I think that's a very symbolic move that happened in the last days, that Euronext made an offer to buy the Greek stock exchange, which is obviously a private transaction, but I think it has a strategic element. It showcases the vibrancy and the strength of the Greek economy, especially in times like this, and this is why we consider it a vote of confidence. We have challenges ahead, but we can meet them.
Okay, thanks for that opening. Well, obviously in your former hats that you were wearing, first of all as Minister of Digital Governance, you were responsible for that very successful reform that took place. I think was voted second most popular reform ever by the Greek people after the establishment of the National Health Service. Minister of Education, after that, launched a number of ambitious initiatives in the education sector, including this, which has gone through now, the privatization, the private universities, and we'll see what results that brings very soon, because they're going to be up and running, some of them later this year. So I'm just curious to know, have you got some revolutionary plans for the finance ministry? What's the big next thing?
Well, I would say that there are many things that we should be doing. If I were to codify this, I would say that we need to have a 3+1 strategy, which can have many revolutionary things within it, but the overall strategy has 3+1 elements. The +1 is the European element that we were discussing before. Overall, currently Europe faces an opportunity and a threat. And the policy that we should have is barrier removal. We have been discussing a lot. The IMF has done a series of studies calculating the barriers that exist between member states of the European Union. You calculated this to be equivalent to 110% in services and 45% in manufacturing. So we need to remove those barriers. We need to develop the savings and investment union. When I visited the IMF a couple of months ago, I quoted Faulkner, show, don't tell. Well, Greece is showing, it's not telling. And I think that the move with the potential acquisition of the Greek stock exchange by Euronext has this nature of the deepening of the capital markets of Greece and the vote of confidence in the savings and investment union. So the +1 is Europe. Remove all the barriers, deepen the union. The 3 domestic elements are the following, in my view. The first one is to remove the domestic barriers to entry. So apart from barriers that exist between member states, we have barriers that exist within member states. Government efficiency is something that we should all seek, regardless of how it's viewed state per state or with the idiosyncrasies of every country. I think it's a good thing overall if you do it properly. So in this regard, we have started eliminating red tape. We have started eliminating excess bureaucracy that existed in Greece. So this is one element that we need to fix. The second one is to vertically look at sectors and try to grow those sectors. I think that we should have European champions. And in order to have European champions, you need to have some national champions who, in a European world without the existing borders, need to further grow. So you need to look at specific sectors where you can achieve that. You mentioned education. There was a Deloitte study that calculated the GDP impact of that specific law from 0.6% to the first year to 1.7% in the 10th year, because you need a certain amount of time to see a specific reform materialize. And finally, I would say that my overall third point is to try to seek how we can have more M&As in the Greek economy. And the Hellenic Υπερταμείο, the Hellenic Fund for Assets and Participations, can do a very good job vis-à-vis achieving more privatizations, more M&As, more internationalization of the economy. And in this regard, this is something that we have managed to do vis-à-vis the stabilization of the economy, but now it's the growth area and the growth period. All of those things taken together can achieve a very significant result. I would even take the liberty to call it a revolutionary result, as your question implies.
Okay. Well, I think we'll come back to some of those, the barriers to entry in sectors, because it's something that's already come up today, which sectors and anyway, more. We had some controversy in this morning and debate, which was very nice. But let's move on. Let me turn to you, Mr. Kammer, and ask you how you see Greece's position in this context, this kind of global context of uncertainty caused by this kind of tariff. I don't want to call it, it's not a tariff war, but the threat of increasing protectionism and tariffs, and hopefully it's not going to end up as a tariff war. But how vulnerable is Europe and Greece, and what's the kind of main let's say, is it the uncertainty that's the problem, or the actual tariffs themselves?
Yeah, let me first start with saying that Greece did tremendously well over the last few years. And that is shown by the numbers. Since 21, real GDP increased by 20%. It's a huge income boost for the population. At the same time, on the fiscal side, debt to GDP, public debt to GDP, was almost reduced by 60 percentage points. That's huge. And we see actually an increase in public investment and some of the priority spending helped by the RRF of the European Union, and helped increasing potential growth through the transformative reforms that have been taking place. And on the electricity and energy side, Greece last year has produced more than 50% of its electricity from renewables, and it became a net electricity exporters. So huge achievements, and also that helps resilience and robustness when it comes to facing these exogenous shocks. Now, Greece is in the European Union, in the euro area. When we are looking at these headwinds which are coming from the trade side, in the euro area, they shaved off growth this year 0.2%, next year 0.2% as well. The main impact comes from the trade uncertainty, because that impacts investment decisions which are long-lasting, to a lesser extent by the tariffs being opposed. Greece, of course, is affected by that as well. Less from the direct effect from increases in US tariffs, but from the indirect effects of less external demand for Greek products. So Europe is facing headwinds, Greece is facing headwinds. And given where Greece is also located, and Greece exposure on the shipping side, all of the big geopolitical and geoeconomic tension are risk factors for Greece. But what it means is for Greece and for Europe to have an agenda that generates productivity, which generates growth and income, and at the same time undertake transformative policies which are going to provide the resilience, including on the energy side, which Europe actually needs.
Yeah, just a quick follow-up on those points. I mean, you emphasize that the main impact is, really coming through because of the uncertainty, really. So in such an environment, is the effect, I mean, I don't know if you can say that we're seeing it already, but do you expect the effect to be mainly in terms of investment basically a downturn in investment, in consumption, in general, in spending by households and businesses. Is that?
We are seeing that, so there's no question about it. But what we are also seeing is when you look at the bigger picture, the recovery in Europe continues, and GDP growth will actually accelerate from this year to next year. So these are headwinds, but they're not derailing the recovery. And I think what we are pressing for is, in the end, medium-term growth prospects. Irrespective of these headwinds which we are facing right now, medium-term growth prospects for Europe and also for Greece are insufficient to deal with the expectations of the population, to deal with the spending pressures which are coming up in the medium term. And therefore, we need to have a much more forceful implementation of reforms in order to transform the economies and to make them more productive. And there's lots of room left. When you're looking at GDP per capita in purchasing power terms, Europe's GDP is per capita is 30 percentage points lower than the US. When you're looking what is behind this, it's not capital stock mainly, it's not labor contribution, it's mostly productivity developments. And it hasn't been always like that. Europe fell back. And the bottom line is Europe can do better on the productivity front with EU-level reforms, but also with national domestic transformative reforms. And this is money on the table. It means just become more efficient and you're generating more income. And who can say no to that?
Mm-hmm. Okay, as I said, we're going to come back to some of those points. I just wanted to ask you about, do you think that Greece can continue to deliver on its primary surplus commitments? I mean, we've just had this, actually had a fiscal surplus and a 4.8% of GDP primary budget surplus in Greece, which has obviously given the fiscal space to the government to use that money for various things, including investment in key areas. Is this something that, do you think these sorts of recent fiscal outturns are sustainable over the medium term? I mean, I'm going to come back to you and ask this as well, but just to ask.
Oh, absolutely. So we think this is actually possible. We are projecting actually with maintaining a primary surplus of 2% of GDP in the future, and being fiscally prudent. Greece will be able to further reduce the debt to GDP ratio by 25 percentage points by 2030. Last year, the primary surplus was 4.8%, so way above the 2%. And it came actually from digitalization of the VAT, fantastic reforms which were undertaken, which boosted the revenue and allowed to actually lower some tax rates in order to decrease the labor tax wedge and enforce the power of labor in the economy. So bottom line is, what does Greece need to do in order to, it needs to stay fiscally prudent, but it also needs to create fiscal space for continued public investment, especially when the RRF ends, and also to look at some areas where better spending efficiency or more spending may be required. I would say education is one of the big ones, because that will be underlying the success of Greece's economy and Europe's economy in the future. And healthcare is another one where some of these issues can be taken care of. But bottom line is, we expect that Greece can continue with being fiscally prudent and implementing growth-enhancing strategies.
Mm-hmm. Thank you very much. Mr. Mylonas, wanted to come to you now and ask about your sector, the banking sector, how the sector finds itself in the midst of this global uncertainty. What is the impact so far, or what do you expect it to be? What's changed? We had you here last year, so it would be good to hear what's happened over the past year, where the improvements have been, before we talk about what the plans are and what you expect to happen in future?
The banking sector, first of all, thank you, and congratulations again to the team for putting together a wonderful conference. It's good to be back. Banks do as well as an economy does. So we had problems in the past. It is now several years that those are behind us. The NPE ratio is quite low. All banks, certainly the systemic banks, have excess capital. They have excess liquidity. They're competing with each other quite strongly to finance good investments. The terms are becoming quite competitive, if I can, as an understatement. So we're helping the economy in that sense. But let me also take a step back and a few words on the economy, because, as I said, the banks can do just so much. If the economy isn't there, we won't do well. And I will agree with the previous two speakers on saying that I think the prospects for Greece are very good. And I want to mention a few of the characteristics. I'll try not to repeat the two previous speakers on characteristics which are underappreciated about Greece. Number one, on tariffs. Trade with the US is quite small. It is about 0.5% of GDP. Most of trade is with Europe and with goods which are relatively inelastic in terms of income. So in an environment of higher tariffs from the US and even some sort of slowdown in Europe, that will have less of an impact on Greece than on other countries. One exception on exports is shipping, but the other exports are relatively inelastic. Another factor that's come onto play is, and you mentioned about fiscal space, defense spending. Everyone has to make a commitment to reach 3.5% of GDP in the next few years. Greece is already at 3.1. It doesn't require an effort to take away resources from the economy to spend on defense because it's already doing so. So that's off the table as well. Investment, which is the source of growth and which is what we finance as banks, is doing extremely well. If you look at non-construction investment, it has reached the level of Europe, 10 percentage points of GDP. And this is high quality spending with multiplier effects in contrast to construction, which has less of a multiplier effect. So this keeps growing. It will continue to grow. Bank lending to the corporate sector is growing at, I think the last figures were 17% of GDP. That's a lot of that's a lot of loans. We have the RRF, which is also leading to supply side impact. I think various consensus estimates are that the potential GDP could grow from 1.3 to almost 2% of GDP if the RRF funds are well utilized, and the banks are certainly making sure that what goes to the banking system is verified as viable as projects. So that's a third point. Fourth point, and this is an important point that the Prime Minister mentioned, we have inclusive growth. This often derails growth in other countries. It's inclusive. Real wages are going up. They're 10% higher than what they were pre-19 inflation boost. Minimum wage is up even higher, 15%. Employment growth is very strong. 1 million up since the peak of the bottom of the crisis. So we're seeing households far more confident. They want to borrow from banks, and banks are also willing to lend to them because they're very viable. So that's a very nice additional point. Fiscal, already mentioned, so I won't go into it. Just one point: the digital aspect of it is key. Digital payments are higher than the average level of Europe. Very few people have realized that the jump we've done in digital. It's 28% of GDP versus 25% of the euro area. And this is helping on many fronts, including the tax revenue. We're also having a budding tech sector. People are coming and investing, all the big names, Pfizer, Google, Meta, they're building data centers, data cables are coming from across the Mediterranean. So there's a bit of a hub being created, which hopefully will lead to innovation as well. So these are just a few characteristics which I think are not well known, and I think are comparative advantages of the Greek economy, which in various aspects of those, the banking sector is supporting, and is no longer in any way a constraint on growth. It is actually quite a multiplier on growth.
Thank you. So I want to kind of home in now on investment, growth, the future, what's coming next. I mean, on the RRF has been great for Greece, and it's been great because it's the absorption of it has been pretty successful, and Greece has been meeting its targets, and I expect that it will be able to take advantage of the funds available to it, but it ends at the end of 2026. So, you know, there is this question of beyond the RRF, you know, how are we going to sustain investment in Greece? And which I guess this is something that Kyriakos focused on in an earlier session. And I suppose I'm going to come back then to you, Minister, and ask you to say a bit more about removing domestic barriers to entry and sectors and where you see the sectoral growth. We had a bit of a debate this morning about whether so far whether we're seeing sufficient investment and resources going into higher value added areas to new growth sectors, or whether there's still too much maybe dependency on the kind of bedrock sectors of the Greek economy, so tourism and so on. So, and the suggestion is that there hasn't been enough kind of removing of barriers, enough disruption. Maybe there's still too many vested interests that are standing in the way of change. So maybe to hear a bit more from you about these 3+1.
We mentioned the fiscal story and the digital story and the successes that more or less create the ground upon which one can build a growth story on top. And in this regard, if you looked at Greece, again, having this very, I would say, vividly interesting anniversary of the 10 years, if you look at the Greek model that failed, well, basically it was an insular model focusing on the non-tradable sectors of the economy and very much underlining consumption as a growth engine of the economy. What were the numbers? So exports to GDP. They were 19% in 2009. During the, let's say, the failure and us starting to need an IMF bailout package. Now they're at 42%. What's the EU average? The EU average is 51%. Arguably, a country the size of Greece should be around 60%. So one could say Greece has a fiscal success, Greece has a digital success, and we're halfway vis-a-vis changing our economic model vis-a-vis exports. If you look at investment to GDP, which is your question effectively, what happens post-RRF? In 2019, when we assumed office, it was 11% total, all in. EU average now, 21%. Where are we today? 15.3%. Again, halfway there, in a sense, but continuously moving the needle forward. In this regard, I would also add that the RRF has a different nature compared to the traditional EU structural funds, which I think is quite pertinent to say. Traditionally, those funds were designed more by the domestic side of the member states. The RRF has the following idiosyncrasy. You need to match funding with reforms. Thus, the Commission, when we were making the negotiation and the discussions, had to be convinced vis-a-vis the impact, the spillover effect, of each one of the investments that we were making. So let's say in the digital projects, full electronic patient records, the digitization of the cadastral process, which, I mean, everyone in the room knows that the cadastre has been an issue in Greece since the reign of King Otto, and it's this government that's about to complete it. So in this regard, all of those things, when completed, do not have a static one-off effect. The multiplier effect of that whole project is there and will continue to be there for the coming years. Plus, EU structural funds and other types of funding are going to continue to be there. The question that still remains is how do you further catalyze private investment in Greece? And then we come to this 3+1 strategy. I think we should be blunt with regards to saying what we want. We should be explicit. And while, I guess a younger version of me would say it's not the job of governments to do industrial policy and the market should solve for itself. Now, I think I would bluntly say that we need industrial policy, we need it at the European level, and that we need champions. And the case in point, not at the Greek level, I would use a European example actually here, because I think that Alfred Kammer is absolutely right. We need the positive winds to come from EU integration. We need to remove the barriers at the European level simultaneously with removing the barriers at the national level. 5G, in my view, is the case in point in telecom, where especially when we had the first round of the geopolitical competition, for instance, between the US and China, there were European companies on the ground which could have unleashed significant economic and technological potential. What did we do as Europeans when this discussion was manifesting itself? Well, we decided to do 27 auctions for the spectrum, to have 27 regulators designing this auction, instead of pooling for size and managing to do an industrial policy, both on the infrastructural side and on the telecom side and on the application side, simultaneously. The growth that would have been unleashed, I think that's the natural consequence of thinking in terms of the Letta and the Draghi report. You need to think in terms of economies of scale and scope. Had we done that, every economy would have won, Greece would have won. We did it at the national level. We did a 5G auction where 25% of the auction proceeds went towards the development of a national fund that finances 5G applications, which is great. The European Commission called it the best auction for 5G in Europe. But this was a 100 million euro fund. Deutsche Telekom invested in the fund. Many private players invested in the fund. But imagine for a second if this would have happened at the European level. How big this fund would have been, how significant the impact would have been, what type of industrial policy we would have deployed, while at the same time the United States were doing one auction and China was not doing an auction at all, but they were administering the spectrum to the telecom players. So we need to think big. Having said that, we also need to think domestic. And in this regard, Greece has many capabilities. It has many challenges moving forward. We have a vivid demographic challenge. Climate change is a challenge for us. We see that every summer. We see that every winter as well. And we have a productivity challenge, because if you ask me what are amongst the most critical aspects of the economy that we haven't yet fixed, is that we need to become better and better and better at our productivity numbers. And we haven't yet done that to the extent that this government wants, or to the extent that we can deliver in the coming years. So in this regard, and I close this very long answer to your question, I would say that you need to become eclectic and specific vis-a-vis the barrier removal. We have a very specific strategy on this. We actually have a platform for this called Mythos, which is public, mythos.gov.gr, where we have codified all the external services that the state offers to citizens and corporations, the relevant European laws, the relevant Greek laws, the average time frame, the average cost, and the steps each one of those events, each one of those services entails. This is step number one, vis-a-vis simplifying those services, vis-a-vis simplifying those interactions. Have we simplified some? Yes, we have. 2,000 services are now offered digitally via gov.gr. But still, we haven't simplified enough, because overall, we offer 5,500 services externally to citizens and corporations. So there are certain things which have been made simple, which have been made automatic, which have gone Estonia. But there are certain things which are still quite bureaucratic, which we need to solve and simplify. So that's the strategy for the coming years until our government mandate ends. We will simplify most of the areas, most of the services where there's a significant business interest and where growth can be further catalyzed. And at the same time, we will think sectorally vis-a-vis barrier removal and growing players vis-a-vis catalyzing M&As in the economy.
Thank you very much. Maybe I can be a bit of a devil's advocate on the industrial policy question, because I acknowledge that different people have different conceptions of what an industrial policy is. But my fear when I look at the direction of policy in Europe is actually that since the global financial crisis, really, that what we've had is a pattern of increasingly kind of national protectionist policies. We've seen kind of exponential growth of non-tariff barriers, and never mind, trade tariffs now, but non-tariff barriers. Everybody is doing this, and it's not just the Americas. We've seen subsidies, industrial subsidies, propping up of many companies that probably shouldn't exist, first of all, through ultra low or negative interest rates. So we've had a kind of proliferation of zombie companies in UK and elsewhere. And now we're talking about other forms of subsidies, effectively for, through industrial policy and national champions and so on. And we seem to be moving in this increasingly kind of protectionist direction. I'm not saying this is what you're advocating.
It's exactly the opposite.
You're advocating the opposite, which is a much more disruptive approach than I think we're seeing in general in Europe. So, but you said it's 3+1. And I'm not sure that, Greece can do it on its own. So maybe this is the moment to bring in you, Mr. Kammer, and say whether, to give your views on this.
Yeah, maybe I start with where the minister started off. When you're looking at one of the big growth boosters for European countries, it's going to rely on the single market. And why the single market? Because we in Europe need to have more dynamic businesses which can operate to scale. When you compare Europe to the US, the US companies have, from the beginning of their life to the end of their lives, a large product market and very limited restrictions to manage across borders. They can grow. They also have a very deep capital market, which services the whole of the US, and that provides the capital. Silicon Valley is a result of labor mobility across the 50 states, which doesn't exist in Europe. If you want to attract talents where the productivity is higher, you need to have that. And they have an energy market and an electricity market which produces cheap energy. And all of those things are actually achievable for Europe, and Europe hasn't exploited that with the single market. Just to give you a bit of an understanding of how powerful the single market is, we did a study of the 2004 accession countries. Their GDP these days is 30 percentage points higher than it would be if they had stayed out of the EU. We compared it to peers. But not only that, for old member countries push to GDP is 10 percentage points higher than it wouldn't have been without the new members joining, just because of a larger market. But the bottom line is, in order to get there, in order to get these European champions, in order to get European companies which can produce to scale, we need to eliminate the intra-European barriers. We need to create more labor mobility. We need to get the banking and the capital markets union going in order to bring the capital and risk capital where the investable projects are, and we need to work on an integrated energy market. That's the European agenda. There is also a national agenda coming with that. And when we are looking at national transformative reforms in European countries, what Greece has been doing and what all other countries are doing at a different and slightly less aggressive scale, it boils down to if countries in Europe on the top 5 priority areas for their country close the gap to the best performer in terms of business regulation, in terms of labor market regulation, if they close that gap by 50%, each country, then the European GDP would be enhanced by 5.7%, higher for Greece. And again, that is a large number which you can materialize. And many of these national reforms, you need to combine with the European reforms. When you look at capital market reforms, you need to have a European element and you need to have a domestic element. Just one number which is important. When we are looking at the most effective reform on the national level for Greece and also for European countries more generally, it is actually moving on labor market reforms. And labor market reforms these days is slightly different what we were talking before. We are talking about education. Because in order to have productive labor in future, countries need to invest more in education. Countries need to invest more in training, skilling, reskilling, upskilling, lifelong learning. And that will be the biggest contributor in terms of structural reform processes. And I think that's something which sometimes is underestimated. But when you're looking at the technological change which is going to happen, if you look at that economies need to transform, in the end it's the workers who need to produce that productivity, and for that you need skilled and educated workers.
Thank you. Mr. Mylonas, I wanted to ask you now about, having listened to the finance minister and Mr. Kammer, how do you see the banking sector responding in the context of this kind of vision of reform that's been set out? What are the opportunities there for the sector? What needs to change? What are the next big challenges?
From the aspect of a banker, we have done a lot of hard work, and we're ready to finance viable projects. What is necessary is to find more viable projects, and the banks can only go so far on that. As I said, we're chasing 4 banks, 4.5 banks are chasing a lot of projects, and we still are not finding enough. So, what can be done to create more investment and create more projects to finance? I think in Greece, number one, we need, you talked about the RF ending. It's not going to end as abruptly as you say. Certainly the projects that we're financing will take several years to complete, so we're looking towards not quite 2030, but near there. So there'll be investment from there. Then to replace our RF funds, we need savings. Okay, and here household savings are low in Greece. We need incentives to increase household savings, both on a flow term. There's a stock, it's in the banking sector. It could be used, invested, perhaps even better if some of it went to other sources of financing. Not all projects should be using bank funding. They could go through private equities, venture capital, equity, the other sources. So incentives for the household to put their money in other forms of financial savings. So promoting financial savings, I think, is an important point. Then turning a little bit the channel, the top Greek firms are top of class. Okay, if you look at the top firms in all the sectors, they're top of class. We have, though, many small firms, and in my view, small firms can never compete at the European level. I think I've said this before on this panel in previous years. Incentives to create larger firms, and I'm not saying colossus, I'm talking from a 10-person or 5-person family firm to a 2 or 3 family firm, just that would create a far more competitive economy. So in contrast to what was said at the European level, at the Greek level, we need to get rid of obstacles or the incentives to remain small. And I think that is, tax evasion is part of that equation. But that would make the economy far more efficient, competitive, and bankable. So we can't make a firm bankable. Once it's bankable, though, we can finance it and make it grow.
Thanks. We're coming towards the end of the session. I wanted to come back and ask you about the human capital labour market reforms. But before I do, I just wanted to give the opportunity. I know we're close to the end of the day, but we do have some eminent economists in our audience, and we have some very attentive conference attenders who may have a question to put to the panel. I always like to bring in the audience. So is there anybody who has a question on any of the topics that we've covered so far? No. I think we've, all is clear then. Aha. Can we have a microphone, please, here at the front? Here we go. Thank you.
I'm asking the question because you insisted. I guess population growth, do we have any ideas what we're going to do about it in Greece? It affects everything in the economy.
Okay, yeah, the demographic challenge, which we did talk about this morning, and I was making the point, I really don't think we should be fatalistic about this at all, about the that aspect of it, because there are things that can be done, but that relates to the labour market question and human capital question, so I'm putting you in the hot seat to answer that.
I mean, generally speaking, I don't think we should be fatalistic about anything, including death. But having said that, we should be cognizant and fully aware of the fact that certain challenges are existential, and you need to treat them as existential in order to manage them. I vividly remember from a book from my university days that one should categorize problems in two ways. There are problems that you solve and problems that you manage. So the existential problems typically are problems that you need to manage. You need to smoothen out the negative consequences. And in this regard, yes, there are things, first to answer Gikas Hardouvelis' question. There are specific things that we can do, and since they are specific, I cannot yet tell them. I'm not at liberty to tell them. But I think that we should be doing specific policies on many fronts on the demographic issue. I would prioritize this as issue number one. And I know that so does the Prime Minister, and this is the direction that he has given me. But having said this, we should also think creatively and strategically, and the silver economy is an area of interest where you can have lots of potential, especially in Greece, vis-a-vis doing what Portugal did, vis-a-vis doing what places in Spain like Mallorca did, or to the maximalist extent what Florida did. We should try to think more strategically about this. We have been debating, discussing this for years. This government has done material many of the reforms that were debated since the 80s and the 70s, be they the capability to have universities that don't belong to the public sector or capturing tax evasion. So we can certainly deliver that. But we need a very pragmatic project management strategy on the ground in order to do this, and we have started. Now, with regards to labor reforms, I would say that many amongst the most difficult reforms, let's say the strongest elements of outstanding things that needed to happen, have already happened in the difficult years. During the context of the programs that were implemented in Greece within IMF conditionality. But to touch upon Mr. Kammer's point, overall, I would say that the education is changing. Education is shifting from the traditional, three-part life, education, work, pension, towards reskilling. You will have many careers in your life, and you will need to continuously do skills enrichment. And in this regard, I have a feeling that this is what's going to drive productivity even further in the coming years. It's one of the areas where we haven't yet succeeded as Europeans, I would say, targeting the proper reskilling and skills enrichment programs. Companies are much better in terms of doing that than countries so far. So we need to learn more about doing that in a very targeted and productive manner. And I think that's the greatest of all the potential moves that we can do on the labor side.
Mm-hmm. IMF published a report on the silver economy in April that had some very interesting proposals and many things in there that Greece and other countries can do to address this problem. Aging population doesn't necessarily mean an unproductive population, older population. Did you want to comment on, come back on?
Maybe one thing which many countries will be struggling as part of the aging is maintaining the pension systems. And here Greece again has done reforms in order to make sure that it's sustainable and that needs to be clearly maintained. That the fiscal part is an important part. But it needs to go beyond that. And we also need to think about longer lifetime employment. That shouldn't surprise us with longer life expectancy. For some countries, immigration is an option as well. So that needs to be taken into account. So there are a number of solutions of dealing with the silver economy. I think for many countries, what is going to hit and is going to be a bit of a surprise is spending pressure coming from healthcare. It shouldn't. And again, that goes to the fiscal sustainability scenario. There is, in many countries, still time to prepare. But in the end, when it comes to many spending pressures hitting the budget, that needs to trigger a dialogue on the priorities and on the social contracts. And in order to maintain the European welfare states and that social contract, what is immensely important is growth. And for that, we need to work on this European level reform and the country level reform, because growth makes all the difference.
Thank you. We've come to the end and we have to stop because we've got a final session, but I'm going to give you your 20 seconds.
Well, that's all I need. Greece, again, has a comparative advantage. We have the Greek diaspora. And the Greek diaspora is looking at Greece, seeing how attractive it is becoming, and certainly at the bank, but I hear at other companies, people are coming back. So there's a different angle as well to our aging population than other countries have.